John from Options Trading Pilot. We're here with Guillermo, my business partner. We are going to look at what's going on in the market. What a crazy week, huh, Guillermo, so far?
Really amazing, right? But we've been waiting for this leg down for a while. I don't know if you remember last week we talked about possibly what was that, Tuesday, Wednesday being a trap, and so ends up being that we were correct in that sentiment, and we got that Thursday, Friday really bad, especially like that Thursday, the last hour was impactful. And so we were able to take some shorts into Friday, and then Friday also was similar. So I took some puts into Monday. John, I don't know what to tell you. I feel terrible because it was an amazing trading day for me.
Well,
One of the biggest days, you know?
yeah, I had Thursday was a good day. Friday was a good day. But then I took off most of my shorts on Friday because the probability of having another down day on Monday was very, very low. And I think that happened in a lot of cases where people have taken off their shorts. So
Yeah.
now whose screen do you have now? You have mine or yours?
I have mine, but I
Okay.
think you can go ahead and share if you want.
Oh, no, that's fine. I had a S&P trade that I did today. The S&P and the SPY actually went right to the support from a Fibonacci standpoint, right at about 377 or so. And I believe it closed just under that, or right about 373. So we're right at a pretty good support level, very, very short term. So what I did at the close was I took a slight, just small long right here, just for a little bit of recovery between Thursday, Friday, and today. We're around 10% off in the SPY or the Q. So went a little bit long on the SPYs. I did a butterfly call, very small. Yeah, very small trade, but big reward if it hits. And then I also did a debit call on SPY just to get a little money back tomorrow. I think it'd be really healthy right here if we would recover some, then we can get short again.
Yeah, I agree. Yeah, there's so many things, and if you look at that RSI, I'm running the 1 hour bars here, John, and you can see that 1 hour bar it just lifted right now, but the RSI is very low. It's in oversold territory. It really bounced off down here and it's climbing. So even though we're going down here, there's a little bit of like that divergence happening on the RSI. So I think you're right. We should get a little bit of a bounce. Now, obviously the overall trend is that we are seeing massive downtrends. And any bear market is going to have their bull rallies, right? Bear market rally, they call them, and they rip your face, and they go crazy, and then they're just there to get you in and take your money, right? So you always have to be careful with that.
Exactly. That's why I know I just did them short term. But boy, I can't imagine if I was long the market right now, like so many people are. They're long stocks, they're long bonds, and people are losing money on both sides, where over the last 40 years, we've talked about this before. Well, the market's down, but your bond portfolio is doing okay, and it's offsetting that. Not today. Not for this whole year, really. It's been a face ripper to the downside, net for the stock indices as well as the for the bonds. Yeah, TLT is just collapsing. And I'm a little bullish on. I mean, I have a bull put spread that's underwater right now because I didn't think it could get this low, but very small trade and with minimal risk. But if you had 40% of your portfolio in bonds and 60 in stock, you might be working a couple of extra years right now.
Yeah, that and you hit the nail on the head. So, just to share, I work with a lot of people, and I get a lot of phone calls. There's a lot of fear that's out there. And some people are still disconnected, John. Some people are wondering, Guillermo, why did you put us into cash? Why this? Why that? And I'm saying this market is way different than what we have seen over the last 20, 30 years. The bonds used to be something where you went into a safe haven when you're seeing the equities collapse and you see that demand pushing the bond ETFs up or the bond funds up, even though interest rates might be going down. But historically, since Volcker, we haven't had a significant period of rising interest rates. And so what we're getting is a double whammy, unlike we've seen. Really, I really haven't seen this. You know, if you
No,
go,
it's quite amazing. Hey, could you throw up XOP for a minute?
yeah.
And just a comment, like and subscribe to us at Options Trading Pilot. We come out and see us on Discord and try our service out. Look at the link in the description. So here's XOP. One trade I did do today, not very many at all, but XOP, the implied volatility rank went from 25 up to a couple of days ago up to 50. So I went ahead and did a wide strangle on that, about 11 to 15 delta. So I'm at a 185 call and a 115 put. So I can make and I do this because one, they're way out of the money, and I collected about $200, $210 per contract. The challenge is I can make an argument that oil should be way down because we're going in a recession. I can make an argument that oil should be going up because of inflation. And so when I have this dichotomy inside me, I play both sides because I could argue both sides, and that means other people can probably argue both sides. I play both sides. I'm just hoping on this one for a volatility crush and not a face ripper for me.
I mean, if you're looking at this, this is the game is here, right? All the game in town is here in oil. And so I really think we're going to push up more. This little pattern right here really shows that maybe it wants to come down, but look at this. The trend is up. The question is, when are we buying? Are we buying here for it to come back here, or should we buy today, right? Should we have bought today? There's a little bit of a wick. I think we get one more day, and I'm buying. I think it's going to go up. You know, when you look at the macroeconomic issues of the world, which, by the way, really hard to trade on those. So, you know, the whole idea is that we're being tactical in what we're doing, but nothing's changed, John. What's going to change? Saudi says, all right, we're going to help the Americans out. We're going to double our output in oil. No, they're not going to do that. Putin's going to come out and say, all right, I'm done with this Ukraine invasion thing. Forget about it. And he's not going to do that. Or our administration is going to say, everybody start pulling oil from the ground. They're not going to do that.
No, not at all. So, I'm playing both sides right now. What I'm really just hoping for is a volatility crush. We went from 25 to 50. Even if it goes down to 40, I make money on both sides. I'm out. But long term, I feel that it's going to go up, and that contributes to our bullish feelings on grains, right? We're in some of the agricultural ETFs, and those have been doing very well. Surprisingly, gold and silver have not been doing very well.
Yeah, that is super interesting, right? Because it's my whole thing of like my major loss in the last year and a half, 2 years was gold and silver. I should have been in lumber and copper because my premise was correct, but somehow
wheat and rice. Yeah,
right. It's like somehow gold loses today, and now it didn't lose softly, it lost big, 2.85%. Yeah. So there's a dissociation. All cryptos are dying. You know, one of my favorite trades over the weekend was that BITO, which, by the way, was posted on Friday. So yep. To be candid, I usually don't try to reveal how many contracts I do, but I did 8 contracts of this. And so this was a couple $1,000 win for.
That's, oh, that's, do you need my Venmo account?
Yeah, I'll send it.
Well, that's good. Yeah, I know with Bitcoin is down 20%. It looks like the IPO is down 20%. Yeah, that's 8 contracts, man. That's awesome.
Yeah, it's awesome. So that's a couple grand win. And so I took it off. But if we look at BTC, let's look at the futures. I like looking at the futures. Oh, it's not big enough. Let me just look at BTC. Okay. See if it lets me see this. I mean, if you look at the futures, that's ugly. That's an ugly graph. Look, we're on the weekly. We're way below this fib line. Look at this volume profile. It's only going to slide down to here. Where is it going to stop? This is the only chance. Like 10,000? Are you kidding me? This is the fib line, but there's no volume here. It may pause at 18,000. It's a fib line. It's a major line. So somebody may make a stand there. But if it turns around here, I would say the only way it turns around is somebody with big pockets trying to protect a position is going to come in right here. But aside from that, look, there's nothing there. So there's more downside. And what's unfortunate is I looked really hard on Friday to see if I can find an Ethereum BITO equivalent that had enough volume with options, but there is none. So that's why I took BITO, because the Ethereum went down even more.
Yeah.
I mean, can you believe this price?
No, it's, you know, it's a little bit ridiculous actually to go down that much, but it is what it is.
It is what it is. So
now, you and I were talking today, another trade that I took last week, and check out one of our videos on my Tesla trades. I do not recommend it to anybody, but it was a fun exercise to go and trade a very wide strangle for the week in Tesla. It worked out very well, but there was an added amount of stress. So what do? You do the same trade again. So I'm in the trade again this week. But a lot smaller. Last week was more for educational purposes. This week is more for a more mechanical trade. So we'll see how that goes. But, you know, they own a lot of Bitcoin, as you mentioned, when we were talking earlier today. I know what we've read is they've reserved some on their balance sheet already. They've taken a reserve that they do when they have to write down something. I believe that was around 25,000 is where they, at least what we're reading is where their estimate was. We're under that now, right? Bitcoin's around 23, 22.
Yeah, it's getting pummeled, man.
So I took the wide strangle on Tesla. Again, that's only for this week. It's not mechanical. There's a lot of gamma risk in it. So not a trade I'd recommend at all. It's just a little fun. It kind of goes into the what we do with the SPY and the SPX and the triple Q, very short-term type stuff, and not what we normally do on the more mechanical trades. So, but you know, maybe Elon Musk pops into here and he holds it up and supports it. We'll see.
Yeah, we'll see. I really want to talk a little bit more on the QQQ. This is my primary vehicle trading lately. And when I feel confident, like I do with NVIDIA, I'll take puts on NVIDIA right now just because you're getting that double whammy of cryptos attacking it, and then it's part of the NASDAQ getting walloped, right? So it's one of those things that when you take a look at what it's doing, this is the weekly chart. We're well below that fib line. And so let me read. I was doing some analysis here. We move. So when we look at that, notice that we're below one of the near-time peaks of volume, and then it's this is the weekly. Yeah, I like looking at the weekly, especially Sunday night, because it gives me a feel for where we're going. That doesn't mean we might not get a little push up, and Powell speaks on Wednesday, so I don't expect any surprises. The only thing we can maybe with greater odds is that we go to 75 basis points instead of 50. The 50 is not working. It's not budging, you know. So we need that to happen a lot more quickly. And to get a little more philosophical in economics, we do need that shock. And you and I both talked about it, and increase those rates severely. But gosh, it would break our back, like as an economy. And I don't think we can afford it for a long time. Maybe for like a month to 2 months, just something, you know?
Well, I think the challenge is, and we're not going to fix it on the video, but people and governments, when I was growing up, it was more in the good times, save money. In the lean times, you spend the money that you saved. And we just haven't, we're not doing that. We're not doing that as a society. In the good times, we spend a whole bunch. In the bad times, we keep spending. And that's just not sustainable, both from an individual level or from a government level. And we're starting to see that. We're starting to see the cracks.
It's being the world reserve currency gives a lot of leeway. And so a lot of the economic principles that are actually true, you can thwart, you know, some of that truth because so much demand for a dollar has been there. And so no matter what we do, people are still need to have dollars in their reserves for every single country out there. And so when you have that, gosh, that's a nice place to be. But what happens when that breaks? Yeah, not good things, man, not good things. And so why tempt that? My point is, like, why even get into a situation where the potential downfall is like enormous, like skydiving?
With,
my friends want to go skydiving, and I'm like, buddy, I can't do that. I have a lot of responsibilities in life. So
no, I don't see why anybody would want to do that myself, but
skydiving, you're out there, you're single, more power to you.
But I think in a lot of ways we're there.
I agree.
And I try not to think about it too much, but it is nice to be mostly in cash. But even with that, everybody gets hurt when the market goes down as much as it did today. You can even have covered calls where your stock is down 10%, but you've lost money on the short side of the call just because premium has gone up.
Yeah, no, it's amazing. I'm looking here at the triple Q daily. We switched from a weekly to daily, and notice that we're sitting right at support after hours. We're seeing that slight little bounce, but if it breaks here, John, look.
Yeah, not good.
Not good.
You see that big frowny face right there. Yeah,
upset right there. That's very upset.
Frown faces are not good.
Not good. So I think that tomorrow, if we do get a nice bump up, it'd be nice. And the danger, and this is the stuff that bothers me, but the danger is that if we see a nice update tomorrow, my play would be to go puts at some point near the peak of that run. But the next day you have Fed day, and you don't want to be in a trade at that point.
I know.
So even though I anticipate that the play should be to the downside, so what I would likely do is buy out of the money puts that if I lose, it's not a big deal. I've already won the week, so there's no.
Well, yeah, good for you, right? I mean, your weeks, you could stop. You should go fishing the rest of the week.
I should. I'm going to go work out right now and take a nap before I eat dinner. And then
nice. That should be good.
I'm sort of on vacation. I get on here, but I'm on vacation. You know what I'm saying?
Yeah. Well, I'm going to go hit a little white ball around, of course.
Oh, that's you are always on vacations, John. Your life, everybody will look at your life and they're like, wait, is this guy for real? Like, that's what all day? Come on now.
Well, the middle of the night, I'm up looking at London and Europe, and then 9 to 4. But after that, it's and after that and before that, it's okay.
I love it.
All right, buddy.
Good stuff, man. Have fun.
Peace.
Bye.